All right, welcome everyone to another Storage Authority webinar. Thank you for joining us today. I'm Garrett with Storage Authority. I really think this is going to be a conversation that opens some eyes. We have a civil engineer by trade who's been building, designing, consulting in our space for over 35 years, Mark Gooden. Mark, great to have you. And before we get going, a quick thank you to MSS and StoreTrack, both fantastic resources in our industry, and they're sponsoring this webinar, so I appreciate them for making this happen. We'll get right into the questions. Again, this is interactive, so fire away your questions in the chat. We'll get to them real time. Let's get going, Mark. What's new, what's exciting in 2026 in self storage?
Well, it excites me that some things never change. Last year, this year, next year, and many years to come, most self-storages are going to be run by a C manager. And if it's a C manager, the owner is a D owner because they let that happen. They didn't want to look for a B or an A manager. So if you want to be an A owner, there's all kinds of investment opportunities. But if you're going to be a D owner, that means you don't want to invest the time, the energy, or the money to be a premier facility. And because of that, right now there's a lot of D owners out there and C managers. So many facilities, when sold, will be leaving money on the table for the A owner to capture. But Garrett, back to your question, what's happening now? Well, after 7 years, the trends have turned and they're going in the right direction. First of all, construction has meaningfully turned down after several years of heavy development. The numbers look like, long term, we constructed 4.2 of the self-storage stock. In 2025, we built 3% of the stock. In 2026, it looks like we're going to build 2.4% of the stock. Um, and that's an incredible slowdown. It's a 70% slowdown since 2023. Yes, we have to remember self-storage is localized, but that alone is going to help us, if we're going to build self-storage. Today, the average stay in a self-storage, this is incredible. It was 9 to 12 months, and now it's 18 to 19 months. Part of that is because fewer people are moving, but the longer people stay, the easier it is to fill that facility up and then charge more. But another reason they're staying so much longer is, I always thought it was my generation that was renting self-storage, and it probably was when I was younger. But now Generation Z, or I could be getting that wrong, now they're buying smaller houses. Instead of a 3 or 4 bedroom, they're buying a 1 or 2 bedroom, and they're making self-storage an extension of their home. So 18 to 19 months is the average stay. That's incredible. It continues 12% of the population to use self-storage. That's incredible. And right now in many places, the rents are above the street rates. That's incredible. For many years before COVID, I would never raise my tenants' rates above the street rates. Now it's common practice. So there's a lot of things going in our favor with the trends. And so I believe now is a good time to either be building, buying, or looking for that land or looking for that facility. You're going to have a head start buying at the bottom of the market versus the top of the market.
Very good points, Mark. Yeah, it is. The market is genuinely tightening as far as like less new supply coming. Stays are getting longer, like you mentioned. Roughly 12% Americans, already use storage. So that's a built-in customer base that isn't going anywhere. It's good stuff. Getting into question two, there's been a lot of conversation about the housing market being stuck. Homeowners locked into 3 or 4% mortgage rates. They're just not moving. What's the real impact of low home sales on self storage demand?
Well, Gary, you're correct. I think if I look at my notes, let me actually look at my notes here because I forget who said this, but I want to tell you guys it was Extra Space. Extra Space said 35% of home buyers use self storage when they move. Um, That's a lot of people, and there's less people moving, um, obviously right now because of the 7% interest rates, and a lot of people, like you said, have 4%, and they don't want to lose that 3% savings. Even though 7%, I've been around a while, it's not a bad interest rate for home buyers. But here's the thing, that 7% now has been around for 3 or 4 years. And what that means is people had to move. They had to move for work. They had to move for family. They had to move for downsize. They had to move because they wanted a bigger house. So every year at 7%, more and more people have financed out of that 4% and are at the 7% rate. So now there is a large block of homes where that excuse to move is gone. And every year that excuse gets smaller. They've bitten the bullet now, and so the homeowners that can move and will move is going to increase with or without changes in the interest rates. And we do expect at some point for the interest rates to come down, but I don't expect them to go to 4%, but I do expect them to drop 1%. 1.5%, 2%. And when that happens, it's going to be a self-storage boom. Everybody who's not in self-storage at that point is going to say, I wish I got in last year. Just like everybody now says, I wish I got in when 4% rates were there. So it is slowing things down, but it's starting to turn that corner as 7% becomes the new norm, with the hope and expectations that they'll drop far enough where people can refinance. But now is the time before this happens to get into self storage.
Yeah, the thing to remember there is that people, they move whether they want to or not. Life doesn't wait for mortgage rates to cooperate, and when they do, they typically need our service, being self storage. So good points, Mark. So fewer people are moving, like we just talked about, and how can self storage owners reduce that impact? How do you grow net operating income when foot traffic from the moves are soft?
Yeah, well, Garrett, that's it's that question is better asked in a slightly different way, because that question won't be around forever. But the real question that we should always ask anytime is, how do I increase my net operating income? The income, my income minus my expenses. How do I increase that? Increase revenue, reduce expenses. And I'll tell you, that should be always on the top of your mind if you're a self-storage owner. You got to do a detailed investigation of CapEx improvements. If I do this, can I charge more rent? You got to do a detailed investigation of operating efficiencies. Um, Operating plus sales and marketing. What can I do to raise the rent rates, street rates and the existing tenant rates? You know, I'm gonna tell you one quick story. Some of you might have heard this before, but I had a guy owned a large Walmart. He converted it to self storage. He paid me to come up for a 1 day review. And I walked around the property with him with my pad and my paper, and I gave him 21, 22 things to do at the end of the day. And I said, I'll go back to my hotel. We'll meet for breakfast and we'll go over these items. I also happened to give him a copy of my book, Self Storage, Crush the Competition. It's a self storage marketing book. We met the next morning, and I asked him, okay, so out of these 21, which one? What's the order you're thinking? What do you think about this? This is pretty exciting. 21 ways to make more money. Um, and he had a look on his face. I said, I'm lost here. He says, I don't want to do any of these. I had you here. You told me I'm doing a good job, and that's what I need to report back to my brothers and sisters. He wasn't going to make a single one. He just liked it the way it is. He was making money, making a ton of money, but boy, was he leaving so much money on the table. I told him, hey, if you do these four things and you're not making more money 6 months from now, I will give you back the $6,000 fee that he wrote me a check for last night. He said he hummed and hawed. I really don't want to do anything. It's running smooth. But what are those four things? I said, get rid of that Coke machine at $2 a Coke. Put a big sign up there, free. Take every man, every prospect, and show them a unit. Don't tell them about a unit. Show it to them. Walk there. Get to know them. Once they were in that unit and you gave them the price at that unit, say, "Hey, let's get that unit in your name," and start walking back to the office. And he says, "Yeah, I can do those." What's the last one, Mark? And I said, "The last one is take down that sign that says 1 free month." He says, "Look, my competition's doing that. How can I take that down?" Hey, with those little things that we just talked about, if you want to do another one, just have your managers get in front of the desk when people walk in. We haven't gotten into the other 15 of them. You don't have to worry about the 1 free month. 6 months went by. He didn't call me, so I called him, and he says, "Mark, I can't believe it. I am making an extra $8,000 per month." And the majority of it was those suggestions. You take a look at the math. If you lose, you're doing 30 rentals a month, and you're giving them away for free, and the average might be $160. 30 times $160 is a lot of money in a year. And that's where half of his increase came. The other half obviously came from more people renting from him, because his managers became salespeople instead of clerks. So, you know, that's what you need to do. No matter what's impacting your self storage, you got to be an A manager and an A owner. Um, so that's the key there, Garrett.
Yeah, no, good point. No, you can't control the market, but you can absolutely control how you run the facility. The operators who win in this environment, they're the ones who stay locked in on the fundamentals. So it's basic, but that's how you win. Um, we got a question that came in, Mark. It just looks like Brian said, you see an influx of rentals in the military base areas.
Yes. In fact, we just got a call from somebody that wants to build a self storage near a base. Um, People, and I don't know so much it's an increase. Self storage 3%. I think it's 3% of the self storage rented is from the military personnel. But if you live near a base, it can be 50 or 60%, depending on the base itself, the size of the base, and is it a base that people go to just before deployment? And the way the world is going, I think we're going to see more and more people in the services that are going to need self storage as they're deployed around the world.
That is interesting. We are going through that with some potential owners that are really looking at a couple areas near bases. So good question. Moving on, Mark. So interest rates have been a persistent headwind. We're sitting around 7%. How does that rate environment affect new development and the buying and selling of existing self storage facilities?
Well, smart buyers are buying based on today's conditions. They're buying it based upon 7% interest rates. Now, back in COVID, there was a lot of buyers that weren't so smart. They're out of, a lot of those is sold already because they couldn't make a profit because, they paid ridiculous amounts of money that was just unrealistic. So, when you're buying, you have to realize this, you know, I don't, the cap rate is an indication of how much profit you're going to make when you buy a facility. So if you buy a facility at a 7 cap rate, that means based upon the current P&L, the NOI, you'd basically expect to make 7% profit if you paid all cash. Um, you know, so that's what you've got to be aware of. You don't want to go out there and buy right today. You can't go out there and buy a self storage at at um, at a 7 cap rate if you're borrowing the money at 7%. You're virtually going to break even, or things are never perfect. You're not going to make an income. Over time, possibly you can make some improvements. So basically, you've got to do enough work, enough research, and go out there and buy a facility at 8, 9, or a 10 cap. Um, that's where it starts, is buying right. And that's part of what's happened now. There's a lot of owners. The majority of self storage owners are in their 60s, and they're in the thought process, when do I sell? And a lot of those people, they had 5, 7 year mortgages that are coming due this year, next year, the year after, and they don't want to go to 7% interest. So they're out there willing to sell their facility at an 8, 9, or 10. It's been long enough where it's become the new norm, and if they're not going to do that, they're not going to sell their facility. And again, I am talking about certain size facilities. If you go to Boston and it's 200,000 square feet, it might sell at a 4 or 5 cap rate. So there's still a lot of those at 4 and 5 cap rate, but the majority are no longer at 4 and 5 cap rates. That cap rate has uh, turned. You have to think of self-storage a little bit like the stock market, especially if you're going to buy a small self-storage, and a $2 million or a $3 million self-storage. The stock market, maybe you make 10% returns. um, but that's a one-time return, one time, when you sell it. But with self-storage, you can make a 10% return, plus have the asset to sell for another 10%, another 20%, another 50%. So it's just incredible, because you have those two values in self storage that you don't have in other businesses. But again, the crazy COVID run and interest have dragged on so long. People are reducing their prices, and they're ready to sell. We just did a blog, and I think it was printed also in Radius's site. How to buy a facility, how to find a facility that's going to make sense, how to get your foot in the door. I actually got a call this morning at 7:30 from a guy who says, "Oh, we talked a few years ago about you selling your facility, and I've got a 1031. You want to sell your facility?" I said no. Even if I was ready, or semi-ready, I would have said no, because I know it would have taken me hours upon hours to get the info that he needs to give me a lowball figure. So we've written a bunch of articles on how to make an offer in 5 minutes of conversation with somebody, because that's what you got to do. You got to make more offers, and people are looking at facilities and not making an offer. It's a mistake. Make an offer on every facility. I don't care what the asking price is. What's a fair price to you? You'll be amazed. You'll find a facility that way.
Yeah, good points, Mark. It's not to offend the seller, it's just what it's worth to us. So you just got to stay putting those offers out there. Quick follow up question to you, and then I got a couple questions in the chat I want to get to as well. Just as we're on this topic, how do you make a profit when you're buying at a high interest rate?
Well, that's when you're buying a facility. It's not when you're building a facility. But when you're buying a facility, you need to buy it at the 8 to 10 cap rate of the existing income. Otherwise, the risks are much higher, the rewards are much less. So you really got to buy at 8 to 10 cap rate. And that means, hey, you've got to make a lot of offers. You got to, any property you spend some time on, make an offer. And the offer is a letter of intent. It's not the final offer. You have time for due diligence. But again, we show you how to make that if you want to go check one of our recent blogs at storageauthorityfranchise.com.
Yeah, and we had somebody ask, where can you find those articles and blogs, and I'm putting that in the chat for everybody as well. But another question that came in when you're talking about increasing revenue, Thomas asked, billboards, cell towers, vending machines, free coke, anything else? I know we're our next month webinar on the 16th. We're covering the top 12 ways to increase the revenue. But anything you want to add? I know there's a bunch we missed there, Mark.
Yeah, and those things that you mentioned are unlikely. You know, you're going to be fortunate if you get some of those things. You really want to go back to the basics. And the next question, we're going to give two scenarios. We're going to give two scenarios of buying a facility and then cleaning it up and what its value is. And I'm going to give 6 or 7 examples of how you um, increase the rental rates. And I'm just going to give several. There's literally, I have a checklist of 20. It could be if you buy a facility and you increase the rental rate. So if it was 153, now it's 153.99. Why doesn't it start that way always? It's beyond me because it doesn't make a world of difference. And then another favor of mine on that same level, if the rent for a 10 by 10 is 153.99, change it to 159.99. Do the math. If you had 300 units, that becomes tens of thousands of dollars, and that one tip alone. Um, and you're going to hear later on, if you're buying a facility and you've got to increase those profits 30%, it's going to take some hard work. Unfortunately, you've replaced the manager. Now you're an A manager. Now you're an A owner. You still have a C manager. If they were leaving that kind of money on the table, the manager was a C manager. You're going to have to get a new manager. People don't like to hear that. They've already got too many lazy and bad habits. But we'll hit some more as we go through. But next month, we're going to go over at least a dozen ways, easy ways. If they fit your facility. Not all facilities you can buy at a discount and increase the rental rates. So, 25% are run well with A managers and A owners, 75%. So you got to get away for those 25%. You just, they've done the work that you want to do. Unless, of course, there's a lot of people, 10, $20 million, they just want to buy a few self-storages and that are run perfectly and take home their 6 or 7% every year. But that's typically not the new person in the business.
Another quick question in the chat, Mark. Can you talk a little bit about automation, tech in the industry? How necessary do you think it is to be successful? Does it help the bottom line? I know we're big on high tech, high touch, kind of meet the customer on the platform. They want to do business, but I know you have some input too, Mark.
Well, you have to have high tech, and high tech is not AI. That's super high tech. And we love AI. It's not going to replace self storage. It might make our job easier for people to do things and pay their rent and so on. But you know, one way of increasing your income is not letting your rents get 30, 40, 50 days old, past due. And so we use a high tech. It's not high tech, but in self storage, it appears to be high tech because nobody does it. They get an automatic email the day before rent's due, reminding them. At 2 days, they get an automatic email, automatic text, actually, automatic text that says, "Hey, if you don't pay today, you're going to be locked out." At 6 days, they get a text. Tomorrow, you're 7 days late. You're going to get a $29 late fee, and it goes right all the way up to having an auction. So even that, it's not high tech. High tech is a bad word. We need technology. High tech is too often not a return on your money. But there is some higher tech cameras because you happen to be in Detroit. There is some of that nature, but you've got to be able to rent when the manager's not there. So, a website, a QR code that brings you to the website, a kiosk, and there's all kinds of technology, but it's not going to save you. It's not going to allow you to increase that rent all by itself. I mean, one of the things we do that most people don't do is you drive up to the gate, it opens. You didn't even have to take your cell phone out of the pocket. Most apps you have to take it out of your pocket and punch this or that in. So yes, you can't, you can't be one of these facilities without a website, and without a website that actually rents. And y- you know but the CRMs these days are high tech, but they cost money, but they're worth it, because calling people back the next day after they called you, and having that notification system uh, uh, gets renters. And now that they're staying for 19 months, you do the math, if they pay $200 a unit. But high tech, and actually, Garrett and I had a discovery meeting with a guy yesterday. That's all he does is AI 24/7. And we talked to him about it, and about it relating to self-storage. It's just not there. It won't be long before they can answer the phone for you and take a reservations. But now, they're better off at taking your number, and they still have the gaps in between the sentences. But that's coming as well. But I bring that up because AI is not going to save your business. Um,
Yeah, I know, Mark. Even the buzzword of unmanned or manless kind of took over the self storage industry, but now they're all realizing you're just a commodity at that point. And then their rates or higher rates are way down now because you're just an empty commodity with no flair or hometown self storage behind it. Um, but to keep us moving along, Mark, I'll jump into question five here. Can you provide a new development scenario, case study by the numbers?
Yeah, and I'm going to keep it real simple. You certainly can get a lot more details, but let's say you don't have a ton of money. Typically we're looking for people to have about $1.5 million if they're going to build a self storage. But when you do that, you're not going to make a million or two. You're going to make several million and have a retirement income. So that's one method. But in order to get there, you've got to build that. And a lot of people do it with real estate. They buy and sell some real estate, but they can also do it with smaller self-storage investments. So let's say you want to build a facility, you want to buy a facility, and you're talking to the guy on the phone, and you say, hey, if you tell me the income, I can offer you a price right now. He said, "Oh yeah, we make X amount a month, and that equates to $300,000 a year in income." Okay, so write that down if you're writing this down. This is buy a facility that has $300,000 income. When I want to give a price initially in the first 5 minutes of a conversation, I assume the expenses are 40% of the income. Okay, and that's pretty much true for most small self storages. And then I decide the cap rate. I want to buy it at an 8 cap rate. And my little calculator, and you could do this by hand, but my little calculator on my computer right in front of me tells me, okay, that should be an offer of $2 million to buy it at an 8 cap rate. I'm gonna make some money because I'm putting money down, and I'm gonna borrow at 7. But I've looked at this facility. I know I can raise the income, and we'll talk about how to do that in a minute. And this is typically going to be a facility with 200 or less units. All right, so you just paid 2 million for it. Okay, here's how you make that profit. You want to be prepared to sell that facility, or more likely to refinance. You want to increase that value of that facility from 2 million to 3 million. That means you made $1 million profit. You get your $1 million back. You can also take out your down payment that you put into this project. So, but you make $1 million in addition to the money you put into it. Okay, um, so the way to do that, and I backed into this. You have to you have to sell, or you have to increase the income to $400,000. It was 300, you have to increase it to 400,000. That's a 33% income. When we build a facility, we feel we can charge 30% more, because of our management system. So it can be done. So, the same expenses, 40%. I reduced the cap rate. When I say reduced, I reduced the profit from by going from an 8 cap rate to a 9 cap rate. No, I was at a 9, so I'm going to sell at an 8. When the place looks clean and has a better feel to it, it's going to sell at a lower cap rate. So I went from a 9 to an 8 cap rate. Not a big change. And then that would turn into a $3 million property for a $1 million property. Again, you can see that calculator on our blog. So it's just a matter of increasing the income. And you had to increase 300,000 to 400,000 to 300,000 to 400,000, and you created yourself a $1 million value. Simple as that. You can run the numbers, and even if you only increase the income to 350,000 instead of 400,000, um, you'd have a $500,000 valuation increase or profit. So those are the calculations you've got to do. You got to do it real quick in 5-10 minutes, and then you've got to spend the day reviewing their income to make sure it's true, reasonable, um, and their expenses. If they tell you the expenses are only 15%, even if they tell you the expenses are 20%, they're doing some of the work themselves. But when you buy and sell a facility, you have to assume it's being run by somebody other than the owner. That's, the owner. No, there's not an owner out there that wants to buy self-storage and work 40 hours a week. That's not the goal.
Yeah, good follow up here. And then somebody just asked in the chat as well, Mark. So $100,000, that's a big chunk. So how would you go about increasing the income 33% without increasing the expenses?
Yeah, and I left the expenses where they are, and so we're going to actually reduce the expenses a little bit too. But first thing I would do, clean inside and out in the gardens. I mean, some of these places, it's like a gas station bathroom. I put a sign in, welcome, and just make it more friendly. But clean inside and out. I would hire a new manager immediately because you can't operate the same way you do before. I would make all the minor repairs that I could, and then I'd set up repairs that I felt are worthwhile, where I can make a profit by doing them. They have to provide a profit in the next 2 to 3 years. Um, First thing I would do, most facilities don't charge their clients insurance. I would make tenant insurance mandatory. And if you're self-insured, that's a $10 profit. You have an insurance company backing it up. So it's all done by the insurance company, but it's $10 per unit rented. So, in the case above, if you had 175 units and they all had insurance, it'd be 1,750 a month, an increase in income. That would be $21,000 a year. The next thing I would do is I would eliminate the first month free. If you rented 20 units a month and the average rental rate was $150, that'd be $3,000 a month. That would give you $36,000 just because you eliminated the first month. So 36 and 21, that's 57,000 right there. The plan would be to increase occupancy at higher rental rates. Now, that you have to do your homework on before you buy it to make sure that's visible. If they're the highest price in the area, you're not going to be able to do that. But if they're the lowest price, you've driven by, you can do a lot of cosmetics, and the owner hasn't raised rents in 3 years. You have that ability to do a lot of these things, but it's got to be based upon reality. Not every self-storage can be bought and turned into $1 million profit in 2 years. But there's a ton of them out there that can be if you've done your homework. The most dangerous thing is to make all these assumptions and then not be able to follow through on them all, for one reason or another. But those are some of the things that you can see what can be done. Um, but that's why you got to look at a lot of facilities, and choose a different cap rate. If it's a funny thing, if there's less work to do on a facility, you've got to buy at a higher cap rate, so that you can make money in the spread between what you borrow and the profit that you're going to make. So you borrow 7, and you got a 9% profit. That's 2% you can make right there. So, and that's what the next seminar is going to be about, is detail of a dozen. But there's so many different ways, and you got to collect pennies. You know, just how many sites have social marketing? So the first thing I would do is I would fire my social marketing guru, and I would do it, and my manager would do it. We would all post on Instagram, and that would automatically post on Facebook. It's easy to make the templates. All of our managers do it, and that's why that old manager that was let go, they're gonna say, "I'm not gonna do that." Brand new manager, "Oh, I can do that. I know how to use Canva. I can do that every day. Give me some examples." So you've got to get on the social marketing business, and it's best done by you, and not a consultant. They don't know your business. You've got to be that hometown business. So literally, there's 30 ways of increasing the income, and if you do them all, it's a no-brainer most of the time.
So last question on this topic, Mark. Are there actual facilities out there that you can buy at a 9 cap?
Yes, absolutely. There's groups out there. There's large groups out there. They're at a 10 cap. They won't buy anything but a 10 cap. But what they do is they go through 100 facilities, and they all make it. They make an offer at a 10 cap. So what you got to do is three things. You got to make more offers below the asking price. You've got to set up an offline game plan, so you're not buying the facilities that are online, that everybody's putting an offer and everybody sees. So you got to have a offline game plan to find and make offers, find the owner. And you have to learn how to be better than everybody else. And that means making an offer on the very first call with the seller. And again, we just posted a blog on exactly what to say when you're on the phone with them. Because you want to give them, a lot of people say, if you get a hold of an owner and say, "What do you want for your facility?" They're hesitant. They're hesitant. With our little calculator, we've got the income, we can figure it out. It's still not best to say, "Hey, I'll give you 2 million for that." It's best to make it a conversation. I'm in the 1.8 million to 2.2 million, depending on some of the factors, and it's a conversation. And now he knows where you are, and if it's in his ballpark, he's going to spend the time getting you the real data, let you look at the facility. So yes, you can buy at 9 and 10 cap rates. And for the people that have not been around, I built my first facility. I think it was 2007, 8. Cap rates for self-storage is at my facilities, 50, 60,000 net rentable. The cap rates were 9 and 10%. This is a new phenomenon where the REITs have gotten involved, and people have figured out, after you learn how to operate these things the first year, it becomes a lot more like residual income, and the cap rates have dropped significantly. But they are now, for smaller facilities. People realize that the evidence is out there. You just, who wants to buy a facility that loses money? Before they did it, because you could do nothing and the rates were going up during COVID. That's what brought these cap rates high, is you could do nothing, and you could assume a higher occupancy, and you could assume a higher rental rates. And that's what the performers were based upon back down. Now, the feasibility study is not going to do that for you. The banks aren't going to accept it. So that means if people want to sell, they've got to sell at a reasonable cap rate so the next guy can make a profit. Otherwise, they're going to hold on to it. And now they see, it's not like interest rates are going to come down. We all know interest rates aren't going to come down to 4% in the next year or two. And these guys are ready to sell for a variety of reasons.
Yeah, we had Thomas in our chat make a good point. I've been making offers 200, 300K below or more asking price since that's what the facility is actually worth. That's true. There's no more selling on projected performance. You do X, Y, and Z. This is what it's worth. It's what it's worth, what it's bringing in today. So good point there, Thomas.
Yeah, and Thomas, I make 3 offers. First I come in and make my offer based upon all my facts. And then I make an offer based upon them loaning me the money less 10%. They're loaning me. I put the deposit down and they're loaning me. So that's the second offer. The third offer I make is they're going to lend me enough for the down payment so I can go to the bank. So it's 3 different prices I give them. So I get them thinking, what's best for them. It's not a hit or miss. And all 3 of them work for me because 3 different prices. So I get any one of those 3, I'm equally happy because I've adjusted the price. So don't forget to ask if they're willing to finance. But if you're going to ask that question, you have to show them, hey, my offer is going to go from this amount to this amount. Um, Especially a lot of times that interest rate instead of 7% is 5%.
Good point. Good point. So jumping into next question, Mark buy versus build. If someone's sitting on capital now and they're serious about getting into self storage, what's your advice? Buy an existing facility or build from the ground up?
Well, it's much harder nowadays to build a very small facility. Some people will still do it if they own the building next door. And I've got one near me. There's a plumbing. They're there all the time, and they built a very small one right next door on the same property. They already own the property, so they built a small one. But it's difficult to do that if you want to make a good side income. So if you want to build a facility that provides lifestyle, we're talking about $1.5 million, and the rest borrowed typically from an SBA lender, and that's going to get you about a 60 to 65,000 net rentable. When you fill that up, you don't need to go to work the next day, and you happen to need 2, 3, $4 million. You call your banker and he'll deposit in your checking account, after the paperwork is signed. So there, but if you're gonna buy, you can start with half that. We use at Storage Authority, we use 600K as a guiding point if you want to get into our franchise system. We like people to have money left over. So, in that first offer where you paid $2 million, if you put down 30%, 30% is about $700, 650,000. If you're the guy buying it after the fact at 3 million, you can see you have more money down. So 600K, you know, um, uh, all the way to whatever you have to buy a facility. But the final decision is going to be based upon your time, your commitment, uh, investment risk, and your financial goals. If you got 600,000, now is a great time to get in the market. 2 years ago, I would tell you it's impossible. You're going to be one of the lucky very few, versus many people that aren't going to be happy in the end. But now things have changed, and I can see it only getting better over the next 5 years.
Yeah, just similar to what you're speaking on, Mark, and Michael asks, let's say someone has 500K, so right there around 600K, Michael, available. Does Storage Authority offer financing, loan assistance, or preferred lenders?
Yeah, we provide guidance on absolutely everything related to the self-storage business, including lenders, names, and vendors, design guidance, design review. So, we are there helping you. We've got the manuals that explain all this word for word, but basically, it's 2 hours a week. I mean, 2 hours, two calls a week, or maybe it's text or whatever, so that you can do a lot more with less. That example I gave you for $200,000, you purchased that facility there and turned it into a $1 million profit. Um, you could do that with 500,000. You'd have to go to an SBA lender, which is going to allow you to put 10% down. Okay. um so that's or typically it's actually 10 to 15% down. So but even putting 15% down, you can see you can do that with $500,000. We like to have a cushion, as you get started as well in your pocket. The banks like that as well. So you don't want to spend your last penny purchasing that facility, because there's going to be some capex. It's good to have 100,000 or 200,000. you know Other people are not so risk aversion. They'll spend every penny they've got on the loan, and they'll go out there and do the landscaping, every time they get a paycheck from their 9 to 5 job, and buy another plant and plant it. But typically that's not your average buyer. I certainly did that, and I know a lot of people that have done that, but we can't promote uh, we can't promote working 24/7.
All right, as we're wrapping it up here, Mark. So it's clearly you're bullish on self storage, and for good reason. But let's be honest with everyone watching: is self storage the right investment for everyone?
You know, it- I read a statistic the other day. 67% of the people want to own their own business. And in the same article, it said only 5% ever own their own business. So it's definitely not for everybody. It's not so much self-storage. If you want to own a real estate business, self-storage is the way to go. But do you want to own a business? That's the first question you have to ask. Are you willing to put in the time? Are you willing to, 4th of July is coming up, and your landlord, your guys call, and the water is spewing all over the place, and unfortunately they're not smart enough to turn off the water to the house. You're driving over there to turn off the water to the house. So, and that's the reason people don't want to get in business, because they don't want to put in the time. But if you're ready to put in the time, and have a detailed game plan, um, now is the time. But that's the first decision. Do you want to own a business and make a commitment to that time? For most people, it's a lifestyle change in the beginning for a little bit more work, but then it's an incredible financial security.
All right. Well, we're going to open it up to Q&A, but before we do that, Mark, any final thoughts you want to leave the audience with?
Well, yes, today we just hit some of the smaller points. We didn't go into the fine details. They're all available. They're all hard to find, when you need them. But the most critical thing is having a team in place, with a solid game plan. Before you look for land, before you look for that existing self-storage, that team will save you hours. It'll save you humongous mistakes, and it will ensure you make much larger profits, you know? So get that team in place day one.
All right. Go ahead and put your questions in the chat. Quick reminder. So next month, we mentioned earlier, July 16th, we're gonna be covering buying a self storage facility. You need to know these 12 ways to increase your income as soon as possible. So stay tuned for that registration link. One more big shout out, thank you to MSS and Store Track for sponsoring today. Um, to everybody watching, if you like Mark's contact info, the buy versus build guide, or access to any of the resource mentioned, included in the value calculator, check out our blog at storageauthorityfranchise.com, or you could send me an email, Garrett, Garrett at Storage Authority, and I can send those resources over as well. Not seeing any more questions coming in. Thomas, I did see a little earlier you mentioned looks like you're using the DSR to purchase your facilities 1.25 or better. That's an interesting approach. I've heard that with
Yeah,
homes, not so much self-storage.
yeah. If I may, Garrett, debt service coverage ratio. Um,
Mhm.
Whether you're building or buying, you need to do the math for that. First of all, the banks are not going to give you a loan if your debt service coverage ratio comes in at 1 or 1.1. What the debt service coverage ratio, it's an indication that you have enough money coming in after expenses to pay the bank principal and interest. So the definition is the NOI divided by the debt service, which is principal and interest. Banks like 1.2, 1.3, 1.35, because that means you have enough 30% extra money coming in and still pay your bank loan. If it comes at 1, it's the exact right amount of money, and they're not going to loan it to you. So as you do your initial calculations with a cap rate, a 10 cap rate, you can only borrow so much money. Just because SBA will let you borrow money at 5% down, the debt service coverage ratio might not work. But if you put down 30%, it will work. So you want a debt service coverage ratio of 1.3, 1.4, 1.5, because it means you're making more money. So every time you want to do both a calculation on the cap rate you're buying it at, and the debt service coverage ratio. They're both easy calculations. And my email is marc at storageauthority.com. If you got a specific question, I'll take the time and give it exact in writing. Because it's important to understand this thing. But a couple, I now that I just looked over my notes, and it's not me saying these facts and figures. Yardi just reported gains in the rental rates in 29 of the 30 top markets. That's much better than even or going down. DXD, you've probably seen them. They're building a lot of these large multi-story facilities, and they're talking about the construction rates and how they've come down, and they're saying it's once in a cycle situation right now. You're at a great time for construction costs. They are down $20-30 a square foot. Um, so it is once in a lifetime. When will it be the next once in a lifetime? I 81 was horrible. 2009 was horrible. So, it's usually 15 to 20 years from the best to the worst. And the best time to get in is it's kind of funny because it's still at its worst. Self-storage is still bad compared to a top, but it's turned a corner. And if you buy now, you're set for life, because the numbers worked with a little bit higher interest rates. The numbers worked with a little bit tougher equations. It's only going to get better over the next 15 years.
Good stuff, Mark. Yeah, we had a RN so what's the approval time on the franchise applications? Should I contact bank first or work on getting franchise license? I shared my contact information. Best to take that offline, RN, but no need to contact the bank first. We'll discuss that on the intro call and the discovery process.
Yeah, and if I may, Garrett, before the official franchise application, call Garrett or myself, have a 15-minute phone call. Save yourself some time, save us some time. See if we're looks like we're a good fit on some of the basics. And then it's the applications on our website, storageauthorityfranchise.com. It takes 15 minutes for you to complete. It does not require a deposit like McDonald's. And then once we have that, we give it an initial approval, and then we have a couple of discovery Zoom calls, 2, 3, whatever. So to make sure we're a good fit, we're looking for people that want to make an exciting income, and that might be different for everybody. But we want our franchisees, they've got to be excited about being the premier facility. We want you to be super successful. So definitely give Garrett or myself a call, and anybody out there. It's 15 minutes. We can usually tell if there's any red lights that have to be worked out. But the banking and SBA lends, and we have bankers that we know like us. They like the franchise. They like the self-storage. So we have some great bankers that we actually request you talk to, a couple of them, so you can understand that their process. But they're going to loan for self-storage as long as that is profitable. They're going to look at the facility, the feasibility study. They're going to also look at you, of course. But with a franchise, you've got a built-in safety net. um, and it's just that's what we do. Is make sure you make more profits in less time.
Another question that came in, I know the answer to, but do you have any facilities for sale that are existing?
No, we don't. Most of our franchisees, just like myself, if I were to sell my facility and take a $10 million profit, where would I put that money? If I wanted to build another self-storage, I would just refinance one of my existing self-storage, take those millions and use them as the deposit. The bank would love that. So, I have no plans on selling my self-storage. My goal is one day it's a income for the kids and their kids. Um, but once you build it, it's unless you're actually going through that process time and time again, and some people do that. They build them, sell, build them, sell, build them, sell. But that's more of a job, and you never get to that early retirement with a large paycheck and nest egg. But we can help you find a facility. We can help you find land. That's a prime reason people get in with us. I know operations and sales and marketing is more important, but people naturally think the key is finding land. The key is finding that facility, and it's very important. But before you know it, you're open, and the key is premier rates.
Otherwise, you're just a commodity. You got to be the hometown self storage and treat every customer like $1 million, and that's how you can have premier rates and be 30% higher. Not seeing any other questions coming in. Be sure as far as resources, check out storageauthorityfranchise.com. Check out the newsroom there. You can look at MSM, Radius Plus, Inside Self Storage. We're always writing articles for them as well. Again, our next webinar on buying a self storage facility and 12 ways to increase your income. That'll be next month on the 16th. Looking forward to seeing everybody there. But until then, we'll see you next time. Take care.